I'm here in Dallas for REITWorld 2011, NAREIT's annual convention for all things REIT. I'm joined by Tim Mihalick, President and CEO of Investors Real Estate Trust. Tim, dividends are at the core of your company's long-term strategy, and it's an important component of what you do. Why is paying a steady and reliable dividend so important?
You know, the history of REIT, which is a REIT that's been in existence for over 40 years, and was built in a locale in an area of about 120 miles around the city of Minot. Most of those were retail-based shareholders who've relied on our dividend, and we felt it's been important over the years to continue to pay that. And so we've managed to pay 160 consecutive quarterly dividends. And it's something we feel it's the root of REIT in our history.
And your company's been successful in the acquisition front. Why has that been part of your strategy, and what's your outlook for acquisitions?
You know, it's kind of an interesting time in the REIT world and in the real estate world, where both the acquisitions and dispositions are opportunistic for both ourselves and other buyers and sellers. If you're familiar with Western North Dakota right now, there's the Bakken Shale Formation oil play is in existence. There's tremendous opportunity. There's currently almost 18,000 jobs that are unfilled in that part of the state. So we see opportunities to take advantage of the oil play and the energy, to build for the energy companies that are coming in for looking for space, whether it be warehouse or industrial or commercial. So we see opportunities there. We also see opportunities in our markets throughout the upper Midwest, and that's where we focus primarily. 13 states, North Dakota, South Dakota, Montana, Minnesota, that are kind of somewhat off the map of most REITs, but within a less volatile market. And I think that's allowed us to find acquisitions in those markets. You don't see the normal players that you would from a REIT perspective. So we've been active and anticipate that to continue.
Great. And picking up on that, you mentioned your focus on the upper Midwest. How is that region performing from a fundamental standpoint, and how does that drive your strategy?
It continues. Actually, it's picking back up. It's interesting that the Midwest tends to lag. When the coastal markets are doing well, we're kind of struggling. When the coastal markets are struggling, we're coming back and doing better. So now we're starting to pick back up, and we suffered for a little bit. But overall, the markets are doing well. Again, they're markets that are a little bit off the beaten track. Our strategy has been to acquire about 1,000 multifamily units in the Rochester, Minnesota, for example, where we can have a presence in those markets and to continue to acquire, use economies of scale through in-house management. And then, our big city philosophy would be the Twin Cities market and down into Omaha. And again, there's a lot of activity. You don't see the volatility, so you're not going to see REIT stock raise and fall. But we like that, and then Midwesterners tend to like less volatility. So.
Great. Well, Tim, thank you very much for joining us today.
Appreciate it. Thanks for your time.
For more from REITWorld 2011, be sure to visit REIT.com.